This is Market Overtime. I'm Diane King Hall at the New York Stock Exchange. Change is afoot at Oracle. The company announcing that it will have two new co-CEOs, Mike Sicilia and Clay Magoric. The move being seen as a testament to the company's increasing focus on AI and the cloud. Shares have been on a tear, with the company becoming the biggest mega cap winner in the month of September. Joining me now is Derrick Wood, Managing Director and Senior Analyst at TD Cowen, to share his assessment of Oracle. Derrick, thank you so much for joining us today. So let's talk about this leadership change that we have coming, this new news with two new co-CEOs. What's your take on this transition?
Yeah, I think we've been waiting for hearing about a successor for Safra for some time. This comes obviously during a huge amount of momentum in the business. Clay was really responsible for building the generation 2 of OCI, which is the business that is really starting to inflect. And I think Mike was instrumental in securing some of the large contracts that they've got from the leading AI vendors. And so putting these two gentlemen at the helm, I think makes a lot of sense. And we are just getting going in terms of the inflection of the cloud business, their AI positioning. And I think the two most instrumental people in positioning Oracle for this are now co-CEOs.
So they're now co-CEOs, and sometimes when there are two people in those in the top spot, it can be tricky, right? It's a balancing act, because it's like you have teams asking the question of who do I go to for this and who do I go to for that. But both of them have deep roots in cloud and AI within Oracle. What does that signal to you in terms of the next chapter of growth for Oracle?
Yeah, I think they bring a good synergy combination where Mike really knows the applications and the software business very well, and Clay knows the kind of the cloud infrastructure business. And those are just bringing those two strong points together. I think it's going to work well. And there still is now we're modeling big inflection in the OCI business. The database business has a huge amount of opportunity ahead to move customers to the cloud, to infuse AI into that platform, leverage the cloud infrastructure they're building out now. And there's just so much opportunity to unlock growth in the database business, what Oracle calls the third leg of the stool in terms of their growth strategy. And I just think that the synergies between those two backgrounds will work well.
Let's talk a little bit about how they guided on OCI. They guided to 70% CAGR through fiscal year 30. So when you think about that, how realistic is that?
Well, they have contracted backlog. They had over $300 billion of new backlog signed last quarter alone. And they publish a schedule of their backlog going out 6+ years. So we've got visibility into that revenue building up. Now, Oracle has to go out, procure the data centers. They're working with data center operators to go build the buildings, and then they need to go outfit it with chips and equipment, and especially NVIDIA GPUs. And they do need to execute on getting that in a timely manner stood up. But they've got the committed backlog. We've got the visibility. They've also told us there's other big deals in the pipeline that are expected to close in the months ahead. We think there's a lot of new AI demand that's not even in numbers today that could top the forecast that we already have now. But that OCI growth forecast, that has us modeling a 30% CAGR in the total business, total revenue over the next 4 years. It's just a remarkable change in growth outlook versus what we've seen at Oracle over the last decade. And they're really taking advantage of the moment around AI.
So let's talk about some more about those numbers. Your most recent note talked about the $455 billion in RPO, the remaining performance obligations. You say it's not a typo, which, I mean, when we saw those numbers, it was like, okay, this is huge. To use one of my colleagues' term, is like looking at video game numbers. You call it arguably the most momentous quarter in Oracle's history. So tell us a little bit about how you arrived at that being the most momentous quarter and why you see it as a game changer.
Sure. Well, going back, I mean, the company through all of last decade was going through a big transition to the cloud, and organic growth was in the 0 to 3% range through most of last decade. And then come kind of the turn of the new decade here, we've started to see growth pick up a bit, move into the mid and then high single digits, and trying to kind of get to that 10% plus revenue level. And all of a sudden now we've got this visibility into a 30% CAGR over the next few years. Huge change in growth profile. And a lot of this has come with just the developments we've seen with OpenAI and Stargate. Stargate, originally the news got floated around that being created in the back half of last year. Then things kind of developed further this year, and Oracle was able to sign some very big contracts that we saw a little bit earlier this year, and then just this last quarter, the big 250 to 300 billion kind of contract just with OCI alone. And so it's Larry and Oracle have just positioned themselves very well to win this next AI investment wave that's not only led by OpenAI, but also xAI and Meta and some of the other leading frontier model vendors. And again, we're just getting going.
So, Derrick, let's talk a little bit more about those mega deals, right? You mentioned OpenAI, you've got xAI, Meta. When you think about those, how critical are those mega deals to the success of Oracle and its positioning in the AI ecosystem?
I mean, absolutely. I think there's 5 major frontier model vendors out there. They've secured 3 of them as big customers, and especially OpenAI. I think that the bigger question we get from investors is this all going to be for training? What's the durability of this business if they're going to go build and spend all this money on data centers? How do we have the comfort that there's going to be a lot of demand durability, especially if this, if the initial investment is for AI training? Now, I think the color we've gotten is that OpenAI fully plans to use Oracle OCI for inference in addition to training. And inference is going to be the ongoing spend for AI applications in perpetuity. And so to hear that, they intend to use Oracle for training and for inference is good to see. We've gotten questions on where does OpenAI get all the capital to spend all this money and have this 300 billion commitment to Oracle. Now, what we saw today is a new partnership between NVIDIA and OpenAI, where NVIDIA is investing $100 billion into OpenAI with every that'll come out incrementally with every 1 gigawatt of data center build that comes to market. That data center build is coming from Oracle. So you can see the close financing that's happening between the biggest players in AI today, and Oracle is one of them.
I'm glad you mentioned that news about the investment from NVIDIA and OpenAI, right? And, obviously there's this potentially transition period that we'll see with OpenAI, since the expectation it will move from a not-for-profit to a for-profit entity. So when you think about all of that in the ecosystem, are you expecting to see just, continuation of massive spending in this space, and that you have to spend big to, deliver?
You do. It is. I think it's an AI arms race right now, and the more OpenAI spends, the more others feel the need to follow, and that's why you're seeing, accelerating demand out of xAI and Meta and others, Anthropic, so it kind of feeds on itself. I think, Oracle's advantage here is they bring the lowest price performance ratios with a unique technology architecture that outperforms the other cloud hyperscalers. And these cost advantages are really helping them win this new business. And, we think with this last contract that was signed a couple months ago, they've secured 5 or 6 gigawatts of kind of commit from data center capacity. This announcement with NVIDIA And OpenAI today is talking about NVIDIA funding at least 10 gigawatts of data center capacity for OpenAI. That tells us there is more demand from OpenAI beyond what we've seen contracted with Oracle. There could be other very large deals coming over the next year from OpenAI that would put our numbers even higher for Oracle. Now, I think other cloud vendors are trying to position for some of that business, but I think that Oracle, there is a lot of upside, even to these big numbers they forecast, if they win more of this OpenAI business, because the demand is out there.
Derrick, Oracle's got its analyst day coming up. What are you expecting to hear then?
Yeah, I mean, they've already given us the OCI revenue targets through fiscal 30. I think they'll round that out with giving a bit more of a picture around total revenue and around operating income levels, which is a big debate out there. A lot of questions as to the cost of capital to build all these data centers out, the margins they're making on this business. And so I think there's a pretty wide variety of estimates out there on where their margins go, where their EBIT goes over the next 5 years. We're in the camp that the margin on the money they're making on this business is pretty darn profitable and better than what's perceived out in the market today. So I think there can be some upside surprise here when they kind of round out some greater color around their fiscal 30 targets.
And Derrick, let me ask you this. Is Oracle still a top pick for you this year? I mean, it's had a massive run up already. It's adding to those gains off the back of the news of the new co-CEOs. So is it still on your list as a top pick?
That was the news today. Also, the TikTok deal, which has not been kind of formalized, but there's been news about that avoiding the ban, Oracle taking an equity ownership. TikTok is a large customer for Oracle. So the fact that they're going to stay in business in the U.S. and Oracle is actually going to take a bigger role as an operator and an equity stake are all good things for the stock. But yeah, I mean, absolutely. Oracle remains a top 3 pick for us. It's been a top pick all year long. I think this stock is still relatively under-owned by the largest investors out there, and I think people are still trying to get their head around, how's the model going to play out? What does all this mean in terms of their, AI positioning? And I think that as the numbers start to really inflect higher, we start to see the backlog convert to revenue and see the growth in the model. That is just going to continue to drive shares higher. And I think that, again, there is still a lot of incremental demand out there that Oracle has not signed that could drive a lot of upside to estimates from here. So all of that seems like the right ingredients for the stock to continue to outperform.
All right, we'll leave our conversation there for now. That's Derrick Wood, Managing Director and Senior Analyst at TD Cowen. Thank you so much, Derrick, for joining us and sharing your insights. Appreciate that. Still ahead, we'll discuss Oracle's role as the plumbing in the ongoing construction of AI infrastructure. Our next guest puts on his tech hard hat to dig into the details. We'll be back with Stephen Dickens after this break. Welcome back to Market Overtime on Schwab Network. I'm Diane King Hall. As of this taping, shares of Oracle are up nearly 90% this year, with a 40% jump just in September alone. Let's continue our conversation on the AI infrastructure player and welcome in Stephen Dickens, CEO and Principal Analyst at Hyperframe Research. Stephen, thank you so much for joining us today. I want to dive right into this with the most recent news at the top, naming 2 new co-CEOs. You've got Mike Sicilia and Clay Magorick taking over the top reins there. What does that signal to you about the focus at Oracle now?
So I think, Diane, this is something that Oracle's done before. They did it with Safra Catz and they did it with Hurd. So this is a model that they've used for transition. Obviously, Larry is still the big name, that big sort of draw, playing the role of CTO and still chairman for the business. But I think this acknowledges for me the two sides of the business that Oracle's in. Mike Cecilia's come from the industry side. Obviously, there's a huge play there with the acquisition of Cerner and the role that Oracle Financials plays into some of those industry markets. So I think that's a really established part of Oracle and is a different modality in how they go to market and where those value propositions and solutions fit. And then you've got obviously Clay, who's coming from the Oracle Cloud Infrastructure OCI piece. That's been on a tear of late. They've been posting probably double what we've seen from some of the other hyperscalers as a quarter on quarter growth, up at 50, 60, 70% quarter over quarter growth. Obviously, some huge announcements recently that we'll obviously talk about around the AI play and underpinning OpenAI. So they've been a key part of Stargate as well, and some of those other big infrastructure plays. So Clay's done a fantastic job. So I think this is Safra and obviously Larry looking at where their business is positioned and then being able to say, what are those two best executives? This is as I say, two very different sides to this business, two different sets of customers, different drivers, different economics. So I think for me, this shows not only the maturity of Oracle, where they are from an executive transition point of view, but also an acknowledgement of their business and the structure.
Stephen, I'm glad you brought up Larry Ellison, and it brings up the legacy piece of the puzzle here when it comes to Oracle. And so let's wind the clock back a little bit, well, more than a little bit. It wasn't always an AI player here. What has it taken from your perspective for the legacy name, and not everybody's been able to do this, to go from software applications to becoming this key front runner in terms of this new ground, this new frontier in artificial intelligence?
Well, so if you look at Oracle, if you wind back, I think it was 2014 when they started OCI, you go before that, Larry particularly was a cloud denier. He's gone on record saying, and I'm going back way back now, 20 years or so, back when AWS started, that he just didn't get it, didn't see it. I think this speaks to Larry's deep technical expertise. He's a willingness to sort of look and see where the market's going. There's been some fantastic partnerships that they've built. You can now run Oracle Cloud Infrastructure and their database offerings in AWS, in Google, and in Microsoft Azure. That would have been unheard of even 2 or 3 years ago, let alone 5, 10, 15 years ago. So I think what you're seeing is that mental flexibility, particularly from Larry, but also the leadership team. Clay's played a critical role in that, enabling the company to not only build its own infrastructure, but partner with hyperscalers. There's a lot of data centricity still with the database. A lot of their enterprise customers, as they're looking to bring data to the cloud, want to stay on Oracle. The ability to run that Oracle optimized infrastructure in an AWS, in a Google, in a Microsoft is really crucial. And we're seeing that value proposition really take hold. So I think coming late, Larry's done a 180 from where he was probably 20 years ago when he was a cloud denier. And what you've seen, particularly over the last couple of quarters, maybe even the last year, is OCI, Oracle Cloud Infrastructure, just explode from a growth point of view. I've been on your show and others on the Schwab Network trying to coin the phrase of the fourth hyperscaler. I think that's without question now that Oracle cemented that position in the cloud landscape.
From a denier to a believer, so much so it's
There's a headline for the team on this segment. Yeah, for sure.
That's right. I mean, it's in the name now, Oracle Cloud Infrastructure, OCI. So you call its place in the AI infrastructure as the plumbing, right? And the person at home might not understand what that means. So let's build on that metaphor. Talk about what that means to the average person and what else makes up the house, the stack for AI.
So I think Oracle plays up and down that entire stack. So they've obviously got cloud infrastructure, huge partnerships with NVIDIA, AMD, all of the semiconductor guys to be able to bring that infrastructure to bear. They've been very competitive on just that infrastructure layer, competing on price with AWS, competing on price with Google, and competing on price with Azure. Plus those neo clouds, there's over 150 neo clouds globally. So Oracle's just at a pure infrastructure as a service layer, has been ridiculously competitive. And they've won share with some big names just purely on that. But I think that undersells where they are. They've been able to then bring a sovereign data strategy to overlay on top of that infrastructure. So what do I mean by that? So you're operating in the Middle East, you're operating in the US, you're operating in Europe. Those are different regulatory frameworks around where you want to put your sensitive data. Oracle, with its core database, its Exadata and Exascale platforms, has been able to put that sovereign infrastructure in place so that you're really not having to worry about where your data's leaving those sovereign boundaries and those regulatory sort of perimeters, if you will. So I think that's key. And then when you start to layer on top of that what they're doing with some of the applications, we talked about Cerner from a healthcare, that's an electronic patient record system. It's been able to provide value all the way up the stack. So from the core infrastructure as a service through that database layer and the AI layer, and then right up into the applications. I think a key thing to think about as well is here, Oracle's not pushing its own AI model like Google is with Gemini. So if you're looking to bring your own large language model, there's some value there from Oracle. You're also not competing if you're an infrastructure provider looking to offer an AI service. There's not a competition against sort of native service running on that infrastructure. And that's helping them partner, and we're seeing that with OpenAI.
Let me ask you this, Stephen. I'm curious to know your thought on where you see and who you see as the secondary and even tertiary derivative winners from Oracle and its expansion.
So I think you've obviously got the semiconductor players, you've got the Broadcoms, you've got the NVIDIAs, you've got the AMDs. They're core picks and shovels providers into the OCI infrastructure. That's the key piece. I think then there's going to be those channel partners. Oracle's got a channel strategy, the ability for those channel partners to leverage off of the database relationship they've probably had and be able to sell into infrastructure. And then you've got the global system integrators, those GSIs, we're talking Accenture, Deloitte's, all the Indian guys, the Wipros, the Tatas, the other providers. You've obviously got the business that span out of IBM for infrastructure, Kyndryl around a go-to-market. So I think a rising tide raises all boats here. So I think it's good news for those core infrastructure providers. It's a good story for Oracle's channel, and it's a great story for those GSIs who were just looking for optionality. We've had a three-way race for hyperscale cloud for the last 15, 20 years. Oracle's now absolutely a viable option and is that fourth hyperscaler. So that gives choice to those GSIs who are looking for a partner.
The fourth of the, I guess, four horsemen, since we're using some of those, biblical corollaries. Stephen, let's talk a little bit about their spending. $35 billion CapEx spending plan for fiscal 2026. I mean, it's just eye-popping numbers. You've got the $455 billion in remaining performance obligations. So let's talk a little bit about CapEx. What does that signal to you?
So 35 billion, huge number, as you say, Diane. You've got to put that in perspective. We're seeing some of those others look at spending more than that. I think when you look at the performance obligations and that backlog, this is going to be what the financial analysts are looking at. CapEx to operationalizing that from a drawdown against that backlog. Huge numbers we saw in that recent earnings around cloud backlog, and that's what drove the price. From a share price perspective, that's what drove the bump. There was a miss on top line, and I think a miss, if I'm right, on earnings itself. But we still saw the stock jump after hours based on purely that backlog. I think the financial analysts are going to be modeling backlog against CapEx as a key performance indicator as we go forward.
Yeah, the outlook obviously played into the share price reaction because you're right, it did miss expectations. But let's again talk a little bit more about. So you talked about capex, the 455 billion in remaining performance obligation for Oracle. It's a staggering number. What does that signal to you about the backlog?
Well, so I think for me, when you look at the market as a whole, we're seeing AWS posting over 100 billion. If you look forward and wind forward where Oracle's going to be, based on that backlog drawdown, that's going to put them absolutely in that same space. It's all now about execution for Oracle. I think they've got that backlog. If they can see OpenAI particularly drawing it down, and I don't see that train stopping anytime soon from a capex investment point of view. They're a machine of an organization with their monthly and daily active users numbers exploding. If that continues, which I predict it will, I think the performance obligations for Oracle are just going to underpin that growth story. So, I mean, I think there's some analysis and work to do, and that's what the equities guys and we're going to be looking at from a quarterly earnings perspective. But if Oracle continues to deliver it, that's just going to underpin where those projections play out.
Okay, let's talk a little bit about the relationship between Oracle and TikTok, right? You mentioned plumbing in general, and one of the things that was talked about in the past is how Oracle is obviously a big part of the backbone of how TikTok operates here in the U.S. Before even the conversation of how does this shift to TikTok, U.S.-based TikTok happen, right? It's been a high-profile headline as it relates to Oracle. When you think about it as, let's say a proof point for Oracle and its relationship to government sensitive work topics, how do you think it's seen in terms of I guess its credibility here?
Yeah, I mean, there's multidimensional to this. There's obviously Larry's relationship with the current administration. He's certainly rolling with that crowd. Safra was at the last tech dinner that the president hosted. There's obviously an element of Oracle playing and flexing its relationships there. That's good. I don't see that as a challenge. There's nothing nefarious that I've seen. I think Larry plays this with a pretty straight bat. I think Clay's going to obviously have been a part of that relationship as well. So that's kind of one dynamic. And then there's the sovereignty and the data sovereignty that I've talked about. Oracle's differentiated here, in my opinion, versus some of those other hyperscale clouds. The TikTok sort of narrative has been around data sovereignty and where access to that data goes. We're still trying to understand the licensing model for the algorithm, and that's going to be interesting from a security point of view. Is that going to be licensed from ByteDance in China? What are we seeing there from an open source point of view? Elon's saying that he's going to open source the algorithm behind X, and has done that already partially. So I think the algorithm discussion is going to be an interesting one to play forward. But I think the key takeaway for me is Oracle get into this infrastructure. ByteDance's infrastructure is bound to be huge. They're going to need that on premises in the US, and Oracle's perfectly placed to that with its huge infrastructure and that 35 billion of capex that we talked about.
All right, we will leave our conversation there. Thank you, Stephen. Appreciate that. That's Stephen Dickens, CEO and Principal Analyst at Hyperframe Research. That's going to do it for this edition of Market Overtime. Be sure to subscribe to our YouTube channel where you can find every Market Overtime episode in our library. And for all your market news, tune in 24/7 at schwabnetwork.com. I'm Diane King Hall. Thank you for watching.